27th of March flies by, doesn't see another year getting well into her. And another really exciting night for you guys that lined up as you start and look for the market for the week ahead. We're going to open up today with Ash on the FTSE. Had a mammoth few months of in that particular product. We're going to then listen to Geoff on technical analysis, and then George is going to give us some price action. We're going to be here for about 20-25 minutes, and you guys are in for one heck of a treat. As I said, sometimes we have Ash come in and do data. He talks about COT. Brilliant, Alexis. We'll add you on. We'll have Alexis in as well doing some fundamentals for us. We'll put it between Geoff and George. Ash is one of those guys. He sometimes comes and he talks COT, seasonals, fundamentals for us. But today he's talking FTSE, his pet product, the one where he's had an amazing run. Ash, what do you see in the week ahead?
I see some downside, actually. I'm going to show you my screen, and we're going to look through just some of the evidence which would suggest that to me. Now, I've been looking at FTSE actually going short for a little while now, as it goes. And I've been expressing that sort of through my trading. I've been taking some shorts on the market, but the market has continued to push higher. So you're going to be kind of careful with how you trade this particular run that we're having. Look at the seasonal data. Now, the seasonal data suggests just a little dip. Now, this is March into April, and the seasonal data suggests that a relatively flat few weeks, but just a small dip into April. So the final week of March into April, which is this week. And then if we look at the weighted average, then that's very, very bearish. And then it tends to bottom out around about April when the market tends to go higher. Now, the budget statement, the spring statement, is one of the reasons that the FTSE would tend to push a little bit higher during this period. But the statement was incredibly underwhelming this time round. So that may well affect the FTSE. On top of that, you've got Russian firms being effectively ejected from the FTSE, Evras, Polymetal, Raven Properties. Now, particularly Evras and Polymetal, these are big companies that are getting kicked off the FTSE 100. So that could be an aspect, and that's happening again this week. So that could be an aspect which could see the FTSE start to dip lower. If you look at the broader picture, the S&P, the Dow, and the Nasdaq, the American markets will affect what happens in the UK. So if we see an equity sell-off in general, then that will affect the FTSE 100, even though the American market is probably still more overvalued than the European stock market. All of them will probably be affected negatively. And you can see that, when we look at the Dow, similar thing. Starts to dip down at the last week of March, just a little bit of downside in the last week of March before we tend to see a rally through April. Same with the Nasdaq, same with the Nikkei, and just here with the Nikkei, and same with the S&P. So equities tend to do quite poorly. Well, not poorly is the wrong word, because you can see that the move down isn't that significant, but they don't tend to rally in the same way during the last week of March. Now, we don't have COT data for FTSE, so we would have to look at what the equities would suggest in the United States to give us just a little bit of a hint what could be happening. Oh God, I can't show you that now. Why does that kick me out? I don't know. Let me just see if I can do it on this one. No, I can't do it. It's just kicked me out the website, and the passwords and the logins are a little bit convoluted. But if you were to look at the COT data, if you guys have got the subscription here, if you look at the COT data for the S&P, starting to look quite negative, particularly on the speculator side. The speculators are starting to come out of the longs and increase their short offerings. So that would be the sort of some of the background detail on the FTSE 100. Now, if we just quickly look at the chart on the FTSE, here's the FTSE 100 on the monthly, looking very, very positive, an incredible bar in many respects. The fact that we dipped down so low at the start of the month, and now we're back to where we are. That's near a looks like 10 to 15% gain. So a 10 to 15% swing, sorry, almost a 20 to 30% swing on the FTSE 100 this month. This would suggest that we are at resistance, this point here. And if you look down at the dailies, then we do start to see a potential emergence of a diamond pattern, which would be relatively negative. Things are still kind of bubbling over in Ukraine. I think that we've got too much uncertainty to suggest that we can just go and buy this stock market without any kind of volatility and any downdraft in between. So for me, this week, mate, we are looking at shorts in the FTSE. Whether they will follow through, obviously a big question. But I think a bit of profit taking in this particular area would suggest that from what we've seen with the data, that suggests that could be the case. A big move down would see us here, all the way down there to retest this area. A gentle move down would see us around about the monthly pivot, which is currently around about 2%, a 2% drop down in the FTSE.
Yeah, it's certainly a weird looking chart at first look, isn't it, Ash? We get this big correlation between Aussie yen and the stock markets, which is a very similar chart. But you look at this and you just go, what's driving that up? Price of oil is troubling and going to cause cost of supply to go up to everything. Inflation is going to be supply side driven and looks to be here for a little while. War in Europe and, NATO talking about, digging in for the long term here. They don't seem to think this is going away. It doesn't seem an environment to be massively speculating on UK stocks, does it?
No, you're absolutely right, mate. And I think it's quite significant, the ones that are being taken off the FTSE. As you rightly point out, we look at the Aussie as a bit of a barometer for global health of growth. But that's a commodity-based currency. So in some respects, it should be doing quite well, in this particular environment. Everas, that's a commodity-based stock, and that's going to get kicked off the FTSE 100. That should have some kind of sway on the actual price. The FTSE does have commodity-based companies that are at the top end of the market cap, which is why we do see this kind of bubble, if you like. Banking stocks, commodity stocks, and oil stocks do drive the FTSE higher. But we've seen in the last few weeks what happens when people start taking profit on oil. It drops significantly. So it only takes something small, I think, when you start to walk on the edge of a cliff, for somebody just to poke you in the ribs, and you may well fall. So that's what I'm suggesting may well happen. I'm uncomfortable trading long given the uncertainty. So I think some downside is likely.
Mate, do you think for the average retail trader new to the market, learning it, they need just to wait for a little bit of confirmation?
Undoubtedly, because the thing with global equities is that that there's that common phrase: markets can stay irrelevant or irrational longer than you can stay solvent. And in some respects, we've got maybe a bit of a case of an irrational market. We've got Fed's hiking rates. That's going to have an effect on growth. We've actually got growth numbers. You see from the UK, consumer confidence the other day was absolutely atrocious, and these are forward playing numbers. These are things that we know are coming. We know that there has got a high probability of a recession, but the stock market will ignore that while they believe they can squeeze as much out of it, and there's always that question of whether the institutes are drawing people into the market just so they can actually clear out their positions. And not that I would want to try and trade off that, but there's always that at the back of the mind, and you've got to keep that in mind when the stock market goes higher and higher and it starts to look toppy. Don't get overconfident that this thing is just going to keep going. But yes, waiting for the correct signals is integral because of the irrationality of the market.
Yeah, really surprising for me that 3 days ago we had a really nice selling day, and I'm really surprised we didn't see some follow through from it. It just looks like perfect level, rejection of it, great place to go short, and you might have expected a bit of follow through. That's my only sort of concern looking at the chart. Mate, thanks as always for your input, and we will keep an eye out for an opportunity to get short on the FTSE. It's certainly a fascinating chart, Ash. One thing I really like, right? I like when markets are interesting. There's times as a trader where markets just aren't interesting, and trading, it doesn't offer you much of mental stimulation in some ways. But these markets are fascinating right now. We have some opportunities around, and we need to make sure we make the most of them. Thank you very much for your